I think it makes no sense to insult gold as some outdated pet rock. It's not. And again, not yesterday, not today, and not tomorrow. And again, the reason the BRICS are looking entirely at gold, and the reason they're net settling oil trades in gold, and the reason the BIS made it the only other tier one asset besides that 10-year US Treasury from Uncle Sam, that's not a gold bug case. That's objective evidence that the world would rather save in gold and spend in fiat. And it's objective evidence that the world, 50% of the world, the BRICS have 50% of the population, 50% of the natural resources, if not more, they'd rather have gold than a US Treasury. And trust me, China would much rather buy oil in ounces of gold rather than stacks of dollar bills.
Gold has repeatedly proved that it maintains its value, if not appreciating, during the last financial collapses, economic recessions, and geopolitical turmoils. For example, during the tech bubble burst in 2000, the financial crisis in 2008, and the recent pandemic-induced volatility, gold's value remained strong, underscoring its appeal as a safe haven asset. While acknowledging gold's potential, renowned expert Matthew Piepenburg underscores gold's superior ability to preserve value compared to Bitcoin. He acknowledges Bitcoin's potential, calling it the speculation asset of a lifetime, but emphasizes that it cannot be equated to digital gold. From a technical standpoint, Piepenburg emphasizes the differences between gold and Bitcoin, arguing that gold is a preservation asset supported by central banks, the BRICS nations, and the Bank of International Settlement, which recognizes gold as a Tier 1 asset alongside US Treasuries. In the latest stage of gold reserve trends over the past 200 years, central banks are reverting to a historical pattern enshrining gold's role as a safe asset. A World Gold Council survey conducted in April 2024 found that 29% of central bank respondents intend to increase their gold reserves in the next 12 months. Based on fundamentals, Matthew Piepenburg states that the BRICS countries use gold to settle oil trades and are gradually moving away from the US dollar. Significant financial upheaval is potentially ahead for the financial world as Saudi Arabia has decided not to renew its 80-year petrodollar deal with the United States. Currently, the US dollar largely dominates the global trading system, which is unlikely to change anytime soon. However, a BRICS gold-backed currency could cause this scenario to shift over time, reducing the power of the US dollar as the world's reserve currency. Now, we present the clips of Matthew Piepenburg's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I was just in Frankfurt. A guy in his late 30s bought Bitcoin at $400. You got to give him credit for holding on. I would have sold at $1,000. So if he's making hundreds and hundreds of millions in his 30s because he took risk on Bitcoin, I give him full credit. That takes incredible courage and conviction. And it certainly isn't make him an idiot. But what did he say to me? And this is just one example. I got to sell some of this Bitcoin and put it into gold to preserve what I've made. Because when I made money on a pre-IPO in my late 20s, I knew it was a lottery ticket. I wasn't pretending it was strong fundamentals. In fact, the stock, it was called Commerce One. It reverse merger went to zero after it went up millions. So, I mean, my stock, but I got out. I was lucky, but I knew it was a bubble. I think Bitcoin is too, but it's a bubble could last for years and you could ride it. But what this young man was doing was, I'm going to sell some of my Bitcoin and put it into gold because I do want to preserve some of my wealth. But again, if you're 29 and you can't get through the month and you're trying to build it in the markets through investing, tread carefully, know what you're doing, and just call a duck a duck. It's speculation. Gold is not a speculation asset. So again, I don't think it's healthy to even have the debate. I think it's clear to know what they are. They're different things. I think it makes no sense to insult crypto investors. I think there's some real smart ones. They know what they are. They're speculators. I think it makes no sense to insult gold as some outdated pet rock. It's not. And again, not yesterday, not today, and not tomorrow. And again, the reason the BRICS are looking entirely at gold, and the reason they're net settling oil trades in gold, and the reason the BIS made it the only other tier one asset besides that 10-year US Treasury from Uncle Sam, that's not a gold bug case. That's objective evidence that the world would rather save in gold and spend in fiat. And it's objective evidence that the world, 50% of the world, the BRICS have 50% of the population, 50% of the natural resources, if not more, they'd rather have gold than a US Treasury. And trust me, China would much rather buy oil in ounces of gold rather than stacks of dollar bills. And that is the new direction. It's not going to happen overnight. The petrodollar is not dead yet. It's a long time off. But the clear direction of that hockey puck is oil net settled outside of the petrodollar, slow and steady, not overnight. You can't deleverage the dollar that quickly. That's a run on the bank. Saudi Arabia knows it. The UAE knows it. China knows it. But the clear indications from the BRICS meetings in South Africa and Kazan is we are slowly turning our back on the US dollar, not going to replace it with the yuan of the ruble. We're not going to kill it. We don't want to see it killed. The UAE and Saudi Arabia are pegged to the dollar. They're not going to kill the dollar. They're just going to reprice it. And so all these things are happening. They shouldn't be sensational. The fighting about the gold versus the DXY, fighting about gold versus Bitcoin is really fighting of abstractions. They're totally different conversations. And not one of them is smarter or dumber than the other. But what we can see is the world is in debt.
Despite Trump's policy goals, Matthew Piepenburg argues that tariffs, job reshoring, and increased spending are inherently inflationary. He suggests disinflation could only result from a market crash or recession, but responses like quantitative easing or fiscal stimulus would fuel inflation further. Economists have said Trump's tariffs and mass deportation proposals will fuel inflation and hurt growth. The president-elect told NBC News last weekend that he couldn't guarantee tariffs wouldn't raise prices. Price growth sped up a bit in November, a sign that efforts to cool inflation may be stalling. Over the past 12 months, the Consumer Price Index climbed 2.7%, the Bureau of Labor Statistics reported Wednesday. That was in line with expectations but higher than the 2.6% annual rate in October. On a monthly basis, the index rose 0.3%, faster than the 0.2% rate in the previous month. According to Piepenburg, inflation is inevitable due to political barriers, leading him to shift from speculation to wealth preservation with physical gold as a hedge. Let's get back to the interview.
I think Trump is going to do what he says, but he won't get everything he wants. And to your point, I absolutely agree. The things he wants to do are going to be inherently inflationary. And the only way we're going to see a victory against inflation in the backdrop of this type of spending and the types of costs of reshoring jobs or mass deportations or mass pink slips in DC or really painful tariffs. Again, I think tariffs in a dollar-centric world are going to fail, but regardless, it's going to be inflationary. And so the only way you could see disinflation would be a major market crash, which right now the markets are effectively centralized and Pavlovian and set up like a national 401k by the Fed, because if the Fed keeps rates down and promises lower rates and prints money out of thin air to the moon, you could argue deficits without tears or markets that only every dip is a recovery. But I think the only way we would see a disinflation or deflationary moment would be a major market crash and also a major recession. That would be disinflationary. But again, the solution to those type of crises, if we have a major recession, is going to be incredible fiscal spending largesse like we've never seen, like we saw post-COVID. If we have a market crash like 2008, we're going to see some version of direct or indirect QE, incredibly inflationary. So again, the policies are inflationary. The only disinflationary forces would be a market crash or a recession, and the only solution to a market crash or recession is mouse click money out of a central bank near you, which is inflationary. And frankly, even what's happening with Fed policy with rate cuts, all of these things are inflationary. So I think you're right. I don't think Trump's very political. You can't talk about inflation on a campaign trail. I think if you were Javier Milei, you could for a while because everyone was so desperate. You can afford to be real honest. Say, we're going to have some pain for a while. But I understand the politics of it. But I don't see how we avoid inflation, major currency debasement. Again, that's why, as Paul Tudor Jones said, all roads lead to inflation.
Gold is now back in vogue among central banks worldwide as the ultimate safe asset. The driving force behind central banks' gold purchases has now widened into a broader desire for asset diversification, with some qualms about weakening the dollar's longer-term international role. Given the rising importance of gold in the global financial system, how can investors best position themselves to protect their wealth in the face of potential economic upheaval? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.